Welcome back, everybody, for another deep dive. And, today we're looking at tech CEOs,
Okay.
stock
All
valuations,
right.
and
Yeah.
this sort of like fine line between confidence and maybe just like really bold personalities.
Yeah. Bold, I think, is maybe putting it lightly in some cases.
Yeah, and, we have these articles about Palantir and Tesla, and they're making headlines,
Hmm.
but for completely opposite reasons, right?
Yeah, totally different reason.
So Alex Karp, who's the CEO of this data analytics firm, Palantir, he's he's known for kind of an unconventional style.
Right. Yeah.
He's not really shy about criticizing analysts that question Palantir's value.
Yeah, definitely not.
In fact, I think one of the articles even quotes him saying something about like drones spraying fentanyl-laced urine on them or something.
Yeah, I saw that one too. That was an interesting quote for sure.
Yeah.
Karp definitely likes to shake things up a little bit, it seems like.
He does, yeah.
Yeah.
And then, meanwhile, over at Tesla, we've got Elon Musk who's doing the whole self-driving cars thing and even getting into robotics now.
Right.
But he's facing a lot of skepticism these days,
Hmm.
right? Tesla's stock has taken a bit of a hit recently.
It had, yeah.
And people are kind of wondering, does this signal that investors are starting to lose confidence a little bit?
Yeah, it makes you wonder, right? Like, can a company's valuation just like stay sky high forever based on, you know, potential, especially in such a fast-moving industry like tech?
Right, exactly. And that's what we're really going to kind of dive into today with these two contrasting stories.
Yeah.
So how is Karp navigating Palantir's success while also getting all this heat for his actions?
Hmm.
And then what's really behind Tesla's stock decline? Is this just like a temporary blip, or does this point to something bigger?
Yeah. Some more fundamental problems, maybe.
So to start, let's unpack what's happening with Palantir. Their stock has actually been doing phenomenally well. It's like the top performer on the S&P 500 over the past year.
It's true. Yeah, their performance has been remarkable in such a competitive market.
Yeah, it really is. But here's the thing, right?
Yeah.
Karp's been selling off a ton of his own Palantir stock,
Yeah.
like close to $1.9 billion worth since early 2024,
Wow.
which puts him like right behind Mark Zuckerberg from Meta in terms of like tech CEO stock sell-offs.
It's a really interesting dynamic, right? On the one hand, you have this amazing stock performance, which usually means people are confident about the future.
Right.
But then on the other hand, the CEO is selling off huge chunks of his shares. So it definitely raises some questions.
It really does. It's like, is he losing faith in his own company, or is this just like a smart move to diversify his portfolio?
Yeah, that's what everyone's trying to figure out. Like analysts and investors are really grappling with this. It's not common to see such a big sell-off from a CEO when the company is doing so well.
Yeah, it's not. And then on top of all that, you have that whole thing with the drones and the,
Right. Yeah.
fentanyl-laced urine comment, which is pretty out there. I mean, let's
Yeah.
be real.
That's one way to put it.
Is this just Karp being his usual provocative self, or is there something more to it?
It's tough to say. It could be, a calculated way to get attention and distract from the stock sell-offs. Or maybe he's just genuinely frustrated with people doubting Palantir's potential. Either way, it's creating a lot of buzz, both good and bad.
Yeah, I mean, the articles mention that some investors, especially those on platforms like Reddit, they seem to be drawn to Karp's like outsider persona, right?
Right.
They see him as this kind of maverick who's not afraid to challenge the status quo.
Yeah, it's fascinating. Some people are turned off by Karp's antics, but others really seem to love his unconventional approach.
Yeah, it's like he's created a bit of a cult of personality around
A
himself.
little bit, yeah.
And, there's even that story about an analyst getting death threats after criticizing Palantir, which is kind of scary.
Definitely. It's a chilling reminder of how intense things can get with investing, especially when you have these big personalities involved.
Yeah, absolutely. It just shows how risky it can be when a company's success is so tied to the CEO's personality. What happens if that persona starts to crack, or if their actions don't match the company's message anymore?
Right. It's a fine line to walk.
Yeah, so we've got this picture of Palantir doing amazingly well, but with a CEO who's raising some eyebrows with his actions and comments.
Exactly. And now let's switch gears to Tesla, where things are looking a little different. So instead of a skyrocketing stock price, Tesla's actually seen a pretty big drop.
Yeah.
And they've lost a chunk of those huge gains they made after Trump's election.
It's quite a contrast to Palantir's success. So what's causing this decline? Is it just the market being volatile, or is something more fundamental going on?
Well, Tesla's valuation has always been based a lot on future potential. Investors have been betting on Musk's vision of a world dominated by Tesla's electric vehicles, self-driving technology, and even robots.
Right. So when that confidence in the future starts to waver, the stock price is going to be vulnerable.
Exactly. And there are a few things contributing to that wavering confidence right now. You've got European sales slowing down, production challenges in China,
Yeah.
and then there's the uncertainty around how those changes to the U.S. electric vehicle subsidies are going to play out. All these things are putting pressure on Tesla's stock price.
And it's not just about the cars themselves, right? It's about Musk's, bigger ambitions, which sometimes sound kind of like science fiction.
Yeah, you're right. One article even quotes him saying that he thinks Tesla's value could eventually be more than Apple, Microsoft, Nvidia, Amazon, and Alphabet combined.
Wow.
Like a total of $13 trillion.
That's a bold prediction.
That's putting it mildly. It'll be really interesting to see if that happens. Can Tesla really achieve that level of dominance?
Right.
Or is this just another case of hype getting ahead of reality?
That's the big question.
Yeah.
And it kind of brings us back to what we were talking about before. Can a company's valuation stay so high for so long when it's not really based on actual performance? Or are investors eventually going to demand to see some concrete results?
Yeah, it's a risky game to play.
Definitely. So we've got these two really interesting case studies here, each giving us some valuable insights into the crazy world of tech investing. And when we come back, we'll take a closer look at Palantir's rise and Karp's controversial decision to cash out.
Sounds good.
Stay with us.
All right, so let's dig a little deeper into this whole Palantir thing and their, incredible rise in the stock market.
Yeah, it's been a pretty wild ride for them.
Yeah, their data analytics tech has really proven valuable, especially for governments and defense.
Right.
They've landed some huge contracts, expanded their client base, and seen really impressive revenue growth.
Yeah, absolutely. But as we said before, this success story comes with a bit of a twist, right? Like Karp, the CEO, has been selling off a crazy amount of his own stock.
He has, yeah. It's almost like $2 billion since the beginning of 2024.
That's a lot of money, even for a tech CEO. It's more than just rebalancing his portfolio or something.
Yeah, for sure. And the timing is just strange. Why would you sell off so much stock while also saying that Palantir is worth so much and even making those provocative comments about the analysts?
Right, exactly. It's definitely not something you see every day. I mean, usually a CEO would hold on to a lot of their stock, especially when the company's performing well. It's like a way of showing confidence in the future.
It is, yeah. So what's Karp trying to say by selling off so much? Is he secretly worried about Palantir's long-term prospects or what?
It's hard to know for sure. I mean, there could be personal reasons behind it, or maybe he thinks the stock is overvalued and wants to cash out before things change.
Yeah, that's possible. And the articles also mention that Karp's actions are kind of dividing investors. Some are a little freaked out by it, and others are actually attracted to his unconventional style.
Yeah, it's like two completely different reactions.
Yeah.
It seems like some investors see his outspokenness and his willingness to challenge the norms as a sign of strength.
Right. They see him as authentic.
Yeah, and a real maverick who's not afraid to shake things up.
Exactly. And they seem to like that he's so blunt, even if it comes across as a little aggressive sometimes. But then you have the other side who just don't like it at all. They see it as a risk for Palantir.
Yeah, they're worried that he's going to alienate potential clients or partners.
Yeah, or that his unpredictable personality could make the company unstable.
It's a tough situation, right? On the one hand, Karp's personality has definitely gotten people talking about Palantir and generated a lot of excitement. But on the other hand, his actions are making people wonder about his judgment and if he's really in it for the long haul.
Yeah, it's a gamble, for sure. Only time will tell if it pays off for Palantir and their investors.
Okay, so Palantir's story is full of contradictions and question marks. Now let's switch gears and look at Tesla's stock slide. Why is this happening?
Well, as we talked about earlier, Tesla's value has always been based on this idea that they'll become a huge player, not just in electric vehicles, but in self-driving tech, AI, and even robotics.
Right. Musk has basically painted this picture of a future where Tesla is this tech giant that's going to revolutionize multiple industries.
And for a while, investors were totally on board with that vision. They pushed Tesla's stock price way up.
Yeah, but now some of that excitement seems to be fading.
It is. So what's causing this change in how people feel?
Well, there are a few things. First, the electric vehicle market is getting way more competitive.
Yeah, you have the traditional car companies finally getting serious about electric vehicles, and then all these new startups popping up.
Exactly. Tesla has a lot more competition now, which is putting pressure on their market share and how much profit they can make.
Right. And second, Tesla's been having some problems with production and delays.
They have, yeah. They struggled to keep up with demand for some of their models, and there have been some worries about quality control, too.
And that makes people doubt if Tesla can actually scale up their operations and meet all of their ambitious goals.
Exactly. And the third thing is that some people are starting to think that Musk's predictions are maybe a little too optimistic.
Like maybe not realistic.
Yeah. He said that he thinks Tesla could be worth more than Apple, Microsoft, Nvidia, Amazon, and Alphabet all put together.
Which is a huge amount of money.
It is $13 trillion. Even the biggest Tesla fans are wondering if that's even possible. So basically, you have more competition production problems and less confidence in Musk's vision. All these things are contributing to Tesla's stock going down.
Yeah, that's about right. And remember, investing in these kinds of companies is always a bit of a gamble. You're betting on future potential, which is uncertain by nature.
And when things get more uncertain like they are with Tesla right now, investors tend to get more cautious, and that can lead to them selling off their stock.
Exactly. That's what's happening with Tesla right now. It's still up in the air whether they can overcome these challenges and get back to where they were.
It's going to be interesting to see how Musk handles this whole situation. Will he stick to his ambitious plans, or will he become a little more cautious?
That's a good question. Musk's leadership has been a big part of Tesla's success, but it's also caused a lot of controversy.
Yeah, his bold statements and his unconventional behavior have both fans and critics.
It's a delicate balance, and it'll be fascinating to watch how he deals with this difficult period.
So we've explored these two very different stories about Palantir and Tesla, two companies that are dealing with the challenges of leadership, innovation, and investor expectations.
And both of them teach us some valuable lessons about how hype reality and the constantly changing tech market all interact.
So for our listeners out there, what are the key takeaways? What can we learn from these two companies?
Well, I think the biggest takeaway is that you have to think critically when you're investing. Don't just get caught up in the hype, no matter how charismatic the CEO is or how amazing the technology seems.
Yeah, it's easy to get swept away by all the excitement, especially in the tech world where everything moves so fast and the future seems full of possibilities.
It is, but it's super important to step back and look at the fundamentals. Don't just believe the hype. Look past the flashy presentations and the big promises.
Really understand how the company makes money, how their business works, and who their competitors are.
Exactly. Don't just rely on what the CEO says or what other people think.
Do your own research and form your own opinion.
The second thing I think is that you need to diversify your investments. Don't put all your money in one company, no matter how good it looks.
The tech industry is known for being unpredictable, and even the best companies can have problems.
Spreading your investments across different industries can protect you from big losses if one company does badly.
And the third takeaway is that investing is a long-term game. Don't panic if the market goes up and down in the short term.
Focus on building a portfolio that fits your goals and how much risk you're comfortable with.
Be patient. Over time, the market usually rewards companies that are consistently creating value and innovating.
So stay informed, stay disciplined, and think long-term.
And finally, don't underestimate the importance of leadership. A good CEO can make a huge difference for a company.
But you also need to be aware of the potential risks of having a really charismatic and unconventional leader.
Yeah, pay attention to what they do, the decisions they make, and how they run the company.
Make sure you're comfortable with their leadership style and their plans for the company.
So there you have it. Our deep dive into the worlds of Palantir and Tesla. Two companies that offer some valuable lessons about the complicated world of tech investing.
It's been a really interesting exploration, and I hope everyone listening has learned a bit more about what's going on in this fast-moving and dynamic sector.
We want to hear from you. What are your thoughts? Let us know in the comments.
Until next time, keep exploring, keep learning, and keep diving deep.
So we've spent this whole deep dive looking at Palantir and Tesla, and it's interesting how they're both kind of at different points in their journeys.
Yeah.
But they both raise these questions about what really makes a tech company valuable in the long run.
Yeah, it is interesting how even though their stories are so different, they both come back to this idea of hype and, these really strong personalities leading the companies and whether they can actually deliver real results.
Yeah, and if we kind of zoom out and look at the bigger picture in the tech world, what are the big lessons we can take away from all of this?
Well, I think one important thing is to be able to separate the hype from the actual substance. It's easy to get excited about a charismatic CEO or a cool new technology.
Yeah, especially in tech where everything is changing so fast and the future seems like it's full of possibilities.
Exactly. But investors need to learn how to be critical. Don't just believe the hype. Look at the company's fundamentals, like how they make money, their position in the market, and those kinds of things.
Yeah, go beyond the surface and really try to understand how the business works.
Exactly. Another thing is that leadership definitely matters, but it's not the only thing. A visionary leader can be inspiring and push a company forward, but their personality shouldn't be the only thing that matters. You still need a solid business underneath.
Yeah, we've seen how both Karp's unusual style and Musk's big pronouncements have made some people love them and some people doubt them.
And that raises a question, can a company really succeed in the long run just because of the leader's personality?
Yeah. Or will that approach eventually stop working?
Yeah.
Something to think about. And I think these stories also show how important it is to be patient and have a long-term perspective when you're investing.
Yeah. The tech world is known for being up and down. Companies can grow really fast, but they can also crash quickly. It's important not to make rash decisions just because the market is moving around in the short term.
Don't panic and sell everything if things look bad for a bit, but also don't chase after every hot new stock that comes along.
Do your research and invest in companies that you believe in for the long haul, and be prepared for things to not always go smoothly.
So as we wrap up this deep dive, what's the one big idea you want our listeners to walk away with today?
I think it's this. When you're investing in tech, it's super important to be able to tell the difference between hype and reality. Don't just get caught up in the excitement of a charismatic leader or a fancy new technology. Look deeper. Understand the business. See if it has potential for growth and if it can adapt to the changing tech world. That's where the real value is.
That's great advice. And as always, we want to hear from you listeners. What did you find most interesting about today's deep dive? What are your thoughts on how personality affects leadership in the tech world? Share your ideas and keep the conversation going.
Yeah, we love hearing from you. And until next time, stay curious, stay informed, and good luck with your investing.